You know how it is, you find that investment that can absolutely never ever go down and then it goes down. Hey, how's it going? Welcome back to my channel. This is Pradeep and you're watching Vlog of Note. In this video, we're going to be talking about 3 losers that Warren Buffett has had in 2022. Let's get started. So first of all, usual disclaimer here, I'm not a SEBI registered expert or a certified financial planner. If you're making your own investments, you should do your own market research. Don't blame me. Anyway, Warren Buffett, probably the greatest investor of all time. If you didn't know, you can't actually lose money on a stock or an investment unless you sell at a price lesser than what you paid for it. Anyway, Warren Buffett and value investing. What is value investing? It's investing in a stock which is undervalued because of market overreactions. For example, the Nasdaq declining over 30%. Warren Buffett is fond of 2 important rules. The first one is this: never lose money. The second one is this: remember rule number 1. It's not important that you make a ton of money in your investments by investing in high growth stocks or meme stocks. It's important that you don't lose the money you have. That being said, Warren Buffett has actually invested in 3 companies which have declined in value this year, 2022, and they represent buying opportunities for you and me. The first one of these companies is Amazon.com. You've probably heard of them. Warren Buffett actually invested in Amazon.com in 2019, so way before their stock went up and then went down again. But anyway, he put about $1.1 billion in Amazon.com, and even at that time, he called himself an idiot for underestimating Jeff Bezos and his company. Anyway, Amazon has declined quite a bit since then, and one of the reasons is because of something called demand pulled forward. Basically, during the pandemic, all of us were locked in our homes and we had no other choice but to order from Amazon. Now the demand has been pulled forward, the current demand has dissipated, and therefore Amazon is facing some short-term headwind. Another reason that Amazon.com has declined in value is because of their investment into Rivian. Rivian is an electric car maker, and I don't have anything against their cars, they're probably pretty good, but at one point of time the market was valuing them at a higher valuation than Ford or GM, which are pretty awesome car makers in their own right. Now since then, Rivian has come down to earth in terms of valuation, and that has resulted in a potential loss for Amazon.com, one of their biggest investors. The third reason that Amazon has declined is probably because of competition. Now, I read this interesting piece that said that in 10 years, Shopify would be worth more than Amazon.com, and I think that's a bit of a stretch. All this being said, right now, Amazon.com is valued at over $1.3 trillion, and AWS itself, that's Amazon Web Services, is valued at over $1.2 trillion. So if you're investing in Amazon.com stock right about now, you're probably getting Amazon's retail business for free. The second stock that has obviously declined in Warren Buffett's portfolio is Snowflake. Now, Snowflake is a cloud-based data company and they're revolutionary in what they offer. Snowflake this year alone has gone down by over 70%. Ouch. Why has it gone down? Well, it's a tech-based stock. All tech-based stocks have gone down. And why have they gone down? It's because the Fed is raising interest rates, and that affects the discounted cash flow valuation of a company. Also recently, Snowflake reported earnings, and up until now they've been growing by over 100%. So when they started to grow at about 80%, Wall Street was not happy with their guidance. Snowflake is also rather different in the fact that they have a consumption-based billing model. That means you pay only when you use their service, as opposed to other SaaS companies which have a fee-based model or a seat-based model. As the economy starts to slow down, investors feel that Snowflake's consumption-based business model will start to suffer. The third stock in Warren Buffett's losing list is actually Apple. Apple Incorporated. Now, you might have heard this story, but Warren Buffett invested into Apple in 2016. Famously, up until then, he'd always said that he doesn't invest in technology stocks. Apple today is Warren Buffett's largest holdings at over $150 billion. Now, recently, you might have seen this headline that says that Warren Buffett's Apple has been overtaken by Saudi Aramco to become the world's most valuable company. Why is this? It's because oil prices are going up and tech stocks are going down. Apple has also had some issues because of supply chain. There was the pandemic, there is the war in Ukraine, and there's also China's senseless zero COVID policy, which is putting pressure on Apple's chief suppliers. The final reason that Apple is obviously declining is because of high inflation. Apple has a positive and a negative in that their products are expensive, but they last for a long time. Now, if you have an iPhone or a MacBook and there is high amount of inflation and low money in your wallet, you probably will hang on to it for a little bit longer. The counter thesis to this is the fact that Apple has an extremely strong services business in the form of Apple Music and Apple TV Plus, so they don't need you to buy a new iPhone in order for them to make money. So there you have it, 3 investments that Warren Buffett has made that have actually declined in value in 2022. Is this a big mistake on the Oracle of Omaha's part? Hardly. I think it's a buying opportunity for investors like you and me. Thank you so much for watching this video. If you have any questions, please do drop them in the comment section down below. As always, please go over to YouTube, subscribe to the Vlog of Note channel, ring that notification bell so that you never miss a video, and I will see you guys in the next episode.